Good day, friends. I'm making this video at the request of one of my subscribers. The topic of the video is long-term option strategies. How these strategies work, which options to choose, and what is the advantage of long-term option strategies. Okay, first let's look at the types of long-term strategies. By long-term strategies, I mean strategies of a year or more. Let's take the March option series as an example. The expiration is in 2 months, but I'll explain all about timeframes soon. One variant is to sell out of the money options, for example, put options of Strike 39, while the current Bitcoin price is almost 43,000. This is a simple strategy in which we either get the underlying asset, Bitcoin in our case, or we get rewarded or compensated for not getting Bitcoin at a very low price. But these options expire after 2 months, and we are interested in the long term of more than a year. So this strategy can be called a wheel. I have a video on my channel dedicated to similar strategies. The idea behind these strategies is this. If the price falls below the strike of the sold put options, we get futures in long, and then we sell put options against these futures. We are constantly spinning this wheel, collecting a time premium. But if the options go into the money and we don't collect that premium, then we sell call options. If the calls go into the money and we are left without futures, they are sold automatically. We sell put options again, and we do this all the time. We adjust the strikes based on our assumptions about price movement. We can sell strikes that are farther out, change the quantity, determine a limit for ourselves, and so on. If we want to use such options for more than a year to get a strategy like the wheel, with put options and further use of futures and call options, we don't need long options. Look, we have March options. Strike 43 at the money that are now worth $3,000. These options have a substantial vega that is 3 times the theta, which means there is a serious vega risk. If we decide to increase the time frame, we get the following. Remember, March options with Strike 43 are worth $3,000. Now let's see what happens to the options with expirations in half a year. Let's go back 4 months to the end of September. The premium of these options is $5,300. If you compare in proportion, the premium has gotten smaller. Vega has now become colossal. It's 10 times the theta. The Vega risk has become enormous. We don't need such long-distance options that are so expensive and have such a huge vega risk. There's usually no liquidity in such options. Such options are not even launched on the AE exchange, because quarterly series are quite enough. There's little interest in options with expiration in half a year, and when working with them, you will still need to reorganize your strategy. You see, you have to get out of the wheel strategy and change the strikes too, because the price of the underlying asset does not stand still, and you still need to rebuild your strategy to optimize your profits. If you are planning to create a wheel strategy and use options that expire in more than half a year, I don't recommend it. These options are too expensive with a huge vega risk. If volatility changes, you risk a very large loss. They have low liquidity and you cannot even roll normally. That's why I recommend using quarterly series or monthly series for long-term strategies. With them, you can make rolls and use different ways to protect yourself against risks. These options are easier to work with, and even if the IV of options change a lot, you can still get all the time premium if you manage to carry your strategy to expiration and not get a margin call. In long-term strategies, we move from one strike to another, use monthly options to get their time premium as well. If you look at the ready-made AE exchange strategies, you will see that such strategies show good returns of more than 100% per year. They are easy to roll and they have been working for more than a year and a half. The time premium is the main reason why options are ideal for long-term strategies. Why are long-term strategies better than short-term strategies in the end? Because there are no increased commissions due to rapid entries and exits and loss fixing that happens too quickly. If there are no such factors, there is constant reinvestment and constant profit generation. Short-term strategies may have higher profits, but they may also have higher risks. Let's look at a strategy similar to the one used in ready-made strategies on the AE exchange. For example, selling put options in the money. As an investment tool for the long-term trading, this strategy works fine. You can exit a position before expiration. You can open new positions in addition. It doesn't make sense to use such strategies when working with weekly series, but monthly or quarterly series is a good choice. Limited Vega risk, good liquidity, you can successfully apply roles, control risks. I always use these kinds of long-term strategies because they really work. You don't need to use any complicated strategies, though there are options. You need to have Bitcoin, put it in collateral, and make covered call option sales. Or if you have some unpromising asset, then you can short all the time, and that can be done long-term too. You just need to sell call options of that asset and generate a constant cash flow from the sold options. If the price rises, you will get the asset at a higher price, which is also a good result if the asset really had no growth potential before. There are a lot of such dead assets in the stock market, so feel free to use it. Share in the comments what strategies you find suitable for long-term trading. It could be selling volatility. With buying volatility, you can make up something interesting too. So, thank you for your attention. If you have any questions, ask them in the comments. Leave a like. I wish you all the best and successful options trading.